Hello, Tom. You may start. Thank you.
Tom, you're on mute.
Okay, hopefully you can all hear me now. I shall start again. So good afternoon, good morning, and a very warm welcome to today's webinar and press conference as we launch what is the 8th edition of the Africa Risk Reward Index. We are very excited to introduce you to you today. What we are very confident is one of our most insightful and hopefully thought-provoking editions of the report to date. My name is Tom Griffin. I'm the Managing Partner for Control Risk Business across Africa, and I'm delighted to be joined by colleagues from our extensive Africa team. First up, Patricia Rodriguez, who is an Associate Director, Tristan Guerre, a Senior Analyst, and finally, Vincent Rouget, who is a Director who leads our Africa Analysis team. And of course, Jacques Nel, who joins from our partners and indeed co-authors of this report from Oxford Economics Africa. Now, just before I hand over to Jacques to kick things off, I wanted to draw your attention to the Q&A function just to the bottom of the screen, which is where you'll submit your questions to the panel. And we're hoping to have about 20 minutes at the end of the session to discuss these through in a little bit more detail. Suffice to say, if time doesn't allow, then of course we'll pick these up separately after the call. Thank you, everybody. That's the admin done. Jacques, over to you.
Thanks, Tom. So I would like to start by a very brief overview of just the methodology we use for the index, and then look at some of the highlights that we've seen on the latest index. So on the methodology, the Africa Risk Reward Index scores each country on 2 dimensions, risk and reward. So the risk scores stem from our Economic and Political Risk Evaluator, or EPRE, which is a joint subscription platform between Oxford Economics and Control Risks. And in this, we then score countries on a number of political measures for social cohesion, security, environment, amongst other political risks, as well as some economic risks, namely credit risk, market demand risk, again, and amongst other ones. And then we aggregate these different areas into a single risk score. And then on the reward side, we also assign scores by looking at the economic structure of an economy, the growth prospects over the medium term, and demographics. And then again, we aggregate these into a single reward score. And then by plotting each country on this sort of framework or landscape risk reward, we can see how these countries compare to one another. And we can also see how these countries' performances change over time. So looking at this change over time now in the latest index, what have we seen over the past year? Some of the major changes have been, well, there have been some quite interesting dynamics. On the reward side, we've seen considerable improvements in countries like Uganda, Senegal, and Zambia. So the first 2 stories are hydrocarbon stories. Uganda is still on track to produce its first oil. Government expects around 2025 to produce and export its first oil. Other macroeconomics are also looking good. Inflation's below the central bank's target. So that's a positive story at the moment. Uganda. Senegal, similar story. They expected their hydrocarbon exports to commence in Q4 this year. There have been some delays, but still it's set to transform the economy from next year onwards, boosting growth, improving external balances, and of course, shoring up the fiscus. And then Zambia is an interesting one. They still in the midst of their debt negotiation discussions, but the government has shown a commitment to its fiscal consolidation efforts. Investors seem to be buying in, and there's been a strong improvement in the institutional environment there. So Zambia is also a positive story at the moment, despite debt discussions. And then on the risk side, we've seen some big movements in some of the continent's biggest economies. And this is in large part due to the economic situation in these economies. So here we're looking at South Africa, Egypt, and Ghana. Firstly, in South Africa, the energy crisis has, it seems, a lot worse than expected this year. The power outages have already exceeded what we saw last year. And this is, of course, having a big impact on the economy. The economy isn't really expected to show any growth this year. This is, of course, bad for politics as well, and then for the fiscus. And with elections next year, it's very unlikely that we will see the needed cuts to some of the more controversial elements like the social support. So that's sort of stimulating risk at the moment. And then in Egypt, again, the country still looks on track towards a balance of payments crisis. Inflation is surging there, which is, of course, very unpopular among the Egyptians. And we could see inflation increase further if the Egyptian government implements the devaluation that the IMF is demanding for the support that Egypt needs. So that's an interesting economy to also keep an eye on. And then Ghana as well, similar to Zambia, is still in the midst of debt negotiation talks. But the Ghanaian situation is different just because the fiscal targets that the country needs to set will require a lot of fiscal consolidation, which again is very unpopular among Ghanaians, but the Ghanaian government has also not proven itself capable of doing the cuts that will be required. So investors also are taking a dim view of Ghana's ability to sort of hit those targets. So that doesn't bode well for debt negotiations going forward. So those are the major changes on the reward side and the risk side. Now I'll hand over to Patricia to talk us through the three main themes that we discussed in this year's report.
Thank you, Jack, and hi, everyone. So as Jack said, this year we have identified three themes which we believe will shape the investment landscape in the year ahead. All of these themes, to some extent, look at how African countries, governments, and businesses are trying to navigate a world which is increasingly fragmented on a geopolitical front. There is a lot happening in terms of the Russia-Ukraine crisis, US-China tensions, and all of this have had some significant impacts on the African economy. So to look at these in more detail, there are three different ones that we've highlighted. The first one is the profits and pitfalls of polarization. So in this theme, we largely explore how African governments are attempting to remain neutral as they come under pressure to either align with geopolitical players across the world. Our second theme is our security-focused one, which looks at African security interventions at a time when Western and UN interventions are gradually losing steam on the continent. And the final theme is financing for the future, which looks at how African financial services, the financial services industry in Africa is actually a bright spot for investment at a time when private investment flows from external sources into the continent are not as high as they used to be before. So starting with the first one, on the polarization topic. So as I mentioned, this one really looks at how African countries are attempting to navigate a more fragmented geopolitical space. What we've seen from major geopolitical actors, be that the US, China, Russia, or the EU as a bloc, everybody's increasingly viewing Africa as a place where they can entice to either align with them on key geopolitical or global affairs. And in doing so, there's a lot of at least pledged investment that is being directed towards the continent. The US, for example, in the past year has said that it has facilitated over 5.7 billion worth of investment into Africa since December 2022. In addition to this, African governments are attempting to, I guess, play all sides, so attempting to secure pledges of investment from not just Western actors such as the US and the EU, but also from Russia, also from China. And China itself continues to be the largest infrastructure player on the continent, even though at this point in time, Chinese investment is starting to decline. So what does all of this mean for investors or businesses that are looking at the African continent? The key element that we draw here is that there are opportunities for businesses, for investors that are tracking geopolitical trends. On the positive side, there has been a lot of attention now focused on climate issues on the African continent, and this is where we see African countries really emerging as a unified voice to try and direct climate-focused investment towards the continent. There is also opportunities for countries in North Africa in particular, and that's because they are not only hydrocarbon producers who can potentially fill in the gap left by Russian gas, but also they are increasingly positioning themselves as manufacturing destinations as European and US, and American governments are looking to decouple their manufacturing bases away from China. But on the other hand, there are some risks involved. We only need to look at South Africa, which this year found itself at the center of a geopolitical storm. The US and other Western allies view South Africa as perhaps being a little bit too close to Russia. And this has been difficult for the South African government to navigate, because at this point in time, they are really trying to push for financing, primarily from Western sources, for their energy transition, which Jacques alluded to as being a huge drag on the South African economy. So there is some profits to be had in this more fragmented landscape, but African governments are going to have to navigate a more challenging a geopolitical landscape for them to be able to benefit overall. But one area where polarization has been, I guess, of profits to African economies is in the critical mineral space. And I'll hand over to my colleague Vincent to talk us through this a little bit.
Thanks, Patricia, and good morning, everybody. Thanks for joining us today. Yes, we wanted to draw attention to critical minerals as an area where we've seen that geopolitical competition be the most visible in the last few years, and where, frankly, we see the greatest card to play for African countries. African countries have large reserves of critical minerals. By some estimates, about 20% of minerals that go into producing standard electric vehicle batteries are located on the continent. So there's a huge potential at the moment, with mineral exploration still low, to drive that exploration and to further identify new deposits that will be highly prized for the energy transition. And we've seen, in this context of tense geopolitical environments, moves by all the main players to engage more with Africa to secure access to critical mineral resources. It's been particularly visible on the side of the US, which has made the search for sources of critical minerals one of their main drivers of their foreign policy towards Africa so far this year. But we've also seen the EU try to negotiate some agreements with some of those mineral producers. The rationale behind these moves is that there is a parallel drive to host mineral production domestically in these powers, but the permitting challenges, the constraints make it difficult. And so there is a parallel drive to friendshore, or to identify friendly countries where mineral projects can happen quicker, where permitting poses less of a constraint. And Africa has a card to play there, because some of the mineral producers of critical minerals, not all of them, but a good number of them, actually have fairly benign political risk profiles as well. Obviously, African countries are taking heed of their growing geopolitical stock on that front. And so what we have seen in the last few months is more assertive moves by various countries to try to make sure that this surge in interest also benefits their economies. And we're seeing what you could call a critical resource nationalism coming back in some economies, where we see an insistence on local processing, more stringent local content requirements, and generally an attempt to integrate these critical mineral supply chain with a broad drive for industrialization. As I said, it is where we see the most intense geopolitical competition at the moment. Another area, and I'll hand over to Tristan, my colleague, to discuss this, where we are seeing also that competition play out, is in the field of security and security interventions on crises. Over to you, Tristan.
Thank you, Vincent and Patricia. I will now move on to the second part of our report, the second theme, which, as Vincent said, is has seen a lot of increasing polarization, and what we wanted to explore is that there's been a real change in the landscape of military intervention in Africa, which has traditionally been led by either entities like the UN or some of Africa's Western partners, particularly France. But over the last few years, we've really seen a decline of those traditional or historical actors, and some regional initiatives to kind of fill in the gap, but also some new bilateral actors also kind of emerging from that void. That's led to a security environment that's to a lot of extent become more complex, and interventions that have also been tied to more business interests. One key element that we explore in the report and that we've really seen taking place, particularly in West Africa, but also in Central Africa, has been that the old model of either Western-led or UN security intervention in the region has kind of run its course and kind of just running out of steam. This is due to several factors. One of them, and is common for both France and the UN, has been a crisis of legitimacy. The other one has also been what we're seeing as a form of geopolitical realignment and polarization, and the new political expectations from a lot of populations and government across the region. So the UN historically has obviously been a key player in African security interventions. Even today, it still boasts around 50,000 troops across the continent and various military missions. Over half of its global missions are still taking place in Africa. But the UN as a kind of peace-building institution and peacekeeping institution has run out of steam as well. It's faced a lot of increasing criticism from local population and host governments where it operates, such as in the DRC, Central African Republic, and in Mali, where we've seen recently that the junta has asked the UN to depart due to its failure to protect local populations, tensions with local governments, but also I think a general sentiment that the UN missions are ill-adapted to respond to a very complex security environment and militancy, and that is just not really designed to do as a peacekeeping force. So we think it's quite unlikely that the UN is going to stay as a kind of major provider for security and respond to security crisis in the region. Meanwhile, we've seen a similar story taking place with France in the last few years. Obviously, France has been the leading Western actor for military intervention bilaterally in Africa for the last several decades. It intervened more than 50 times on the continent since the 1960s, and has obviously enjoyed quite a lot of political influence and economic influence, particularly over West Africa. Last few years, however, it has also undertaken a big crisis of legitimacy, and we're seeing that its role is rapidly unraveling, particularly in West Africa. There's several reasons for this again. Similarly to the UN, a big part of that legitimacy issue has been its inability to rein in Islamist militancy in the Sahel after nearly 10 years of military intervention in Mali and also operations in Burkina Faso and Niger. Also a growing resentment among both governments, but also parts of the population in those countries about what is increasingly seen as a paternalistic approach, and maybe some new expectations about what military intervention should be. I think in parallel, what's been driving that downfall of France's influence as a military power in the region is those geopolitical shifts that we've seen taking place because of successive coups in West Africa since 2020. There's been a growing feeling of nationalism and more emphasis on national sovereignty among local populations across the region, and less accepting of foreign military involvement, particularly Western foreign military involvement from the former colonial power France. And the governments that have taken power in those regions have been very skilled at capitalizing on this sentiment to grow their support base, and have driven essentially France away politically and militarily from those countries. And we've really seen France kind of having to exit Mali, but also exit Burkina Faso, and the Niger government, so the Niger junta, also asking France to depart from the country. At the same time, we've also seen an increasing rapprochement with Russia and towards other new partners. So to fill this gap that's been left by, and is increasingly being left by the departure of France and the UN, regional initiatives have kind of struggled to offer an effective and sustainable solution to those security crises that we're seeing happening. African governments and institutions have assumed a greater role in providing security in the region. There's been successful ECOWAS interventions in West Africa, also African Union intervention in Somalia are good examples of this. But there are still some quite severe challenges that preventing a, I guess, sustainable solution. Whilst ECOWAS has been successful in some way, it's also been proven unable to deter coups in West Africa in the last few years. The African Union has been able to push back against Al-Shabaab in Somalia, but the group is still obviously very capable. Recently, we've seen an SADC intervention in Mozambique, which also had some initial successes, but there's issues around funding that is kind of, making it difficult to combat militancy over a long period of time. And some of those countries are already looking for a way out, including South Africa. We're seeing similar issues around competing interest and lack of funding, undermining missions like the G5 Sahel in West Africa, but also the East African Community Force that's been deployed in Eastern DRC and has come under a lot of criticism from the Congolese government, with, again, those competing interests between rival countries within the bloc coming to the fore. With, I guess, issues around regional initiatives, not necessarily delivering all their promises, and decline in foreign intervention by traditional actors, we're seeing increasingly bilateral agreements and new actors kind of rise to fill in the gaps. So a good example of this is that several countries have looked towards the Wagner private military group to fill the void and provide a range of security services. The footprint of the group has grown quite a lot in Africa since 2017, and it has been providing a range of security services and help propping up some governments in countries like CAR or Mali most recently. Unlike France or some international institution, some of that help is less conditioned on political gains, but more linked to a range of business interests. It also opens the door for Russia to expand its influence in the region. However, the Wagner group, whether that's in Mozambique or in the Sahel, has kind of given mixed results at best in the last few years. It also struggled to make significant and sustainable gains against militants, and its kind of brutal methods has also opened a range of integrity and reputational issues, which for some businesses and local governments doesn't make it a very attractive solution for the coming years. That said, and in line with this growing doctrine of African solutions to African problems, we're also seeing the emergence of Rwanda as a key security actor in the region, which influence is also likely to continue growing in the coming years. It's been a major provider for UN missions over the continent that's helped it build a very solid reputation for professional and well-trained military force that is very competent at counterinsurgency. In recent years, there has been very successful intervention in Central African Republic and more recently in Mozambique as well, where it's helped beating back against Islamist militants in Cabo Delgado. Those interventions have been a major policy asset for Rwanda. It's helped the country kind of shield itself from criticism over some of its regional track record, particularly criticism from the DRC. But also, similarly to Wagner, has also opened the door for a range of business interests. And we're really seeing this kind of entanglement between military operation and business interests taking place. And we think that will be a very defining factor of African-led military interventions in the future. As this landscape of security intervention is evolving, we also anticipate that the business environment will evolve. That's going to create a new range of risks for business operators, security-wise, obviously a more complex environment, long-lasting conflicts and more actors, which will require careful monitoring and efforts to remain neutral. And business-wise, obviously, we're seeing, as France's role decline, new opportunities for new partners such as Rwanda, Russia, but also Turkey and China to become more prominent. But also, we'll also anticipate that companies will have to invest greater amount of resources to navigate some regime changes, geopolitical realignment, and the involvement of foreign actors, which obviously can open space for integrity challenges and reputational challenges. I will stop there for this part.
Thanks, Tristan. And just before we move over to Jacques, just to remind all of the participants on the call today that you are able to submit questions to the panel. We've had a couple of interesting ones come through, but I would encourage you not to be too shy and direct some of the trickier questions to our panelists through the Q&A section at the bottom of the screen. But Jacques, would you like to take us to the final theme?
Sure, Tom, thanks. So as Patricia mentioned, we did try to end this year's publication on a brighter note, and this is financial services, and this is indeed a bright spot. And that's for three main reasons. One is that we continue to see progress. It wasn't a short-term boost to access to financial services that we've seen. We continue to see the expansion and access to financial services improve across the continent, which is really important because secondly, this is a catalyst for broader economic growth. Access to financial services is required and supports economic growth in most, if not all, other sectors of the economy. So that's really another positive stemming from the expansion of the services. And then thirdly, we've seen that homegrown champions have been the drivers behind this expansion in financial services. And the article, this final article this year, unpacks this latter point a bit, diving into the detail of the homegrown champions and how they've been driving growth. So African financial institutions or institutions based in Africa are the dominant players in the African financial services sector, and they continue to consolidate this dominance. These institutions are primarily based in the bigger economies on the continent, so South Africa, Egypt, Nigeria, Morocco, and Kenya. And there is also sort of a regional dimension to it. So a lot of these institutions tend to at least first expand into their broader regions before some of the institutions have a Pan-African footprint. And another thing we've seen is that these larger financial institutions are also pretty bullish about growth prospects in Africa. So South Africa's Standard Bank, which is the continent's largest bank by assets, doesn't have a major footprint in North Africa, but it is on track to expand into North Africa. And Moroccan banks, which already have, estimates suggest they already have a 20% market share in the West African ECOWAS bloc, they also plan to expand deeper into West Africa. And then it's important to note that this expansion in services, in financial services, has taken on a uniquely African character. And this is due to the sort of blurring between lines between access to telecom services and financial services. And this, of course, is due to a number of reasons, but firstly, due to some technological advancements. And there's a big incentive to push for this due to the lack of traditional financial infrastructure, so ATMs, bank branches, even just normal transport to be able to get to an urban area. There's sort of been this there's the confluence of those two factors: technological advancements allowing this transition, and then the incentive to sort of take the opportunity to leapfrog traditional financial infrastructure and sort of embrace this this blurring of the lines between telecoms services and financial access services. And because of this, mobile banking has made considerable inroads in Africa. You don't need an ATM, you don't even need a smartphone these days, just a good premium cell phone, and then you'll be able to access a number of banking services from wherever you are in Africa. And we've seen that West Africa has led the way on this. Countries like Senegal, Ghana, Cote d'Ivoire they really making inroads, or mobile banking is really making inroads, or has already made inroads in these economies. And it's also interesting to see that there's sort of been an inverse relationship between the maturity of a banking sector and that economy's uptake of mobile money, which is again just an indication of these economies leapfrogging traditional financial infrastructure to sort of just embrace the possibilities that mobile money and digital banking provide, and the fact that they don't require traditional infrastructure. Just to illustrate this point, if we look at the value of mobile money transactions in a country like South Africa, which has the continent's most sophisticated banking sector, the value of mobile money transactions equals less than 1% of GDP. But if we look at this figure for countries like Ghana and Senegal, the value is well over 100% of GDP. So it's then also important to note that this, this hasn't been by chance, and it wasn't inevitable that Africa would embrace digital and mobile banking that we've seen, or that African institutions would be leading the charge on this. African financial institutions have been on the forefront of ease of access innovations, doing a lot of experimentation and also a lot of investment. If we look at, the latest figures show that tech startup in Africa exceeded $3 billion for the first time last year. And more than half of this went towards fintech startups. Some of the bigger international players are also recognizing the potential. In August this year, we saw MasterCard taking a minority stake in the fintech division of MTN, which is a major telecoms provider in Africa. So this just shows, that major international players are also taking notice. And then just to sort of take a step back, this wasn't inevitable, and a key factor behind the success of, mobile innovations in Africa has been the role of regulators. So regulators across the continent have been broadly supportive of financial services, reforms and innovations. Why? This is again in recognition of the value of expanding financial services for broader economic growth in these economies, and then the opportunity to leapfrog traditional infrastructure and become global leaders in these areas. If you had to go the old route, it would take forever to give the majority of the population access to finance. But if you put the right regulations in place, or at least don't get in the way of innovation, you can get there a lot quicker. But this, of course, requires a balance between, the positives, so the innovation being on the forefront of innovation, and the benefits such as financial inclusion on the one hand. But then on the other hand, you have to protect consumers. You have to prevent illicit activities from happening. There's a lot of dangers involved in innovation. So this is a balance, regulating the sector is a balance that African regulators have to sort of find. And it's a difficult balance because it requires constant evolution. As a new innovation gets adopted and expands, so too do regulators have to evolve what they're looking at. And this then, of course, requires considerable capacity by regulators and monitors, which could be a problem, which is a problem in most African countries, just considering the demand on state institutions, or the need for improvement in a lot of state institutions in various respects across the continent. And this risk related to this need to regulate a very innovative sector with some question marks regarding capacity was most recently highlighted by the grey listing of Nigeria and South Africa earlier this year by the Financial Action Task Force. And in fact, of the 26 countries on the Financial Action Task Force's grey list, 11 are from Africa. So governments will, of course, be compelled to step up efforts to monitor and regulate the sector going forward, but we can expect the process to be very slow and uneven between countries, given the limited capacity among regulators. So, financial services is undoubtedly a bright spot, as we try to make the point here, and it's a very exciting area to be in with a lot of potential, but investors will be under close scrutiny and might be subject to variations in compliance and reporting requirements, But, you know, this is, of course, this is a very important but very manageable risk going forward. So not to scare off investors, we're just highlighting the importance of, you know, managing the risk in the sector with considerable potential. Back to you, Tom, for the Q&A.
Grand, thank you very much, Jack, and indeed to all of our speakers. Just a reminder again to feel free to leave questions for the panelists on the Q&A section at the bottom of the screen. But I'll kick off with a couple that have come through over the last half hour or so. So first one, I think, Vincent, for you, I've seen, yes, a number of your analyst notes refer to this issue of sort of contagion of coups. I guess just interested to try and understand from your side, what are some of the drivers behind that? I guess, you know, do we expect to see this continue? And perhaps where else could be next on the list that you're tracking as well?
Thanks, Tom. So there have been various drivers of military coups in the different countries, and each has its specific causes. I guess what we can see as common factors, one is disillusion with the political class, whether government or opposition, that have been part of the political elite for the last 30 or so years in these countries, in a sense that this generation has run out of road. Another, which is more specific to the Sahel countries, and particularly Mali and Burkina Faso, is the inability of these civilian governments to respond to security issues. And the third one is an element of contagion, as you say, which is that, you know, military officers in different countries see that the coups by and large have been welcomed by popular opinion, and that they haven't been met by a dramatic response from regional or international organization. And so in that sense, there is a risk of contagion in a region where militaries talk to other militaries a lot, and that there seems to be a positive reception from the part of the populations to these coups. Where next is always a hard one to predict, but you know what we can say is the strongest predictor of military coups is a history of military coups, and the sense that the military has a habit of interfering in politics. And so in that respect, the countries that are already under transitional administrations, Mali, Burkina, Guinea, to name a few, they're by far the most vulnerable to another military intervention that would come from divisions within the security apparatus. Coming next is probably a group of Central African countries. Gabon was one of these until a few weeks ago, that have been governed by the same regime for, in some cases, 3 decades, where they've relied on a mixture of patronage and coercion to keep in power, but where there is a very thin base of popular support, and where, again, some military officers may feel emboldened to take matters in their own hand, particularly around the issue of succession to some of the long-standing rulers that we see in that region.
Great, thanks, thanks, Vincent. Maybe Tristan, one here for you, and indeed you touched on sort of Wagner and Russia, and clearly this is something that's of great interest to a lot of our clients at present. But if you look at, I guess, the role of Wagner, the role of Russia, and we see that expanding across the Sahel, I guess, yeah, how do we see that playing out for our clients, and what are some of the things that they need to be watching out for in terms of scenario planning or potential trigger points within that as well?
Thank you, Tom. Yeah, indeed, that's a question that's been that we've been asked a lot in the last couple of years, and particularly since we've seen the successive coups taking place in Burkina Faso and then most recently in Niger, where it's quite clear that the local governments are kind of like looking at Russia as this new alternative partner to France in a lot of regards, especially as a security guarantor and like as a potential security provider, or at least security to get assistance in combating militancy. Today, Wagner is only operational in Mali. There's been a lot of speculation, especially in the press in the last few years, about its potential deployment in Burkina Faso since the coup, and then most recently in Niger. For now, it doesn't appear to be taking place in either of those countries. Burkina Faso has kind of, in line with a very strong history of, focus on national sovereignty and nationalism, decided to focus on their own national resources. They've made it pretty clear that they will not be asking for Wagner to deploy to assist with counterinsurgency, and instead is focusing on civilian recruitment. In Niger, we had seen some similar dynamics, but since the coup, there's been also some indication that the new CNSP junta is also seeking a rapprochement with junta, kind of following a similar playbook that we've seen happening in Mali. The way we're seeing things is that Russia is only likely to remain mostly, I guess, silent partner and indirectly providing those countries with assistance in combating militancy. I think we're quite unlikely to see any formal boots on the ground, whether that's through Wagner or Russia itself. Most of it is most likely going to be limited to training and material support, something that's driven a lot of animosity and tension between those countries and France and the US has been the reluctance of those Western partners to provide them with military hardware and weapons, which Russia seems a bit more inclined to do. So we're likely to see a lot of that rather than widespread deployments. One thing I would say, and that's something that we're monitoring quite carefully, is for Burkina Faso, because as the current government strategy against militants does not appear to be working really well. The more this plays out, the more this kind of temptation will grow to maybe hire Wagner for support on the ground, especially for some parts of the junta that may be closely aligned with Russia. In terms of what our clients will have to watch for, I think a lot of the things that we touched on in the report is this kind of growing interlinkage between the security risk and business risks, where with a company like Wagner coming in or increasing business interest from Russia, a lot of the companies that are currently operating in the country will have to monitor very carefully, who they decide to do business with, because, we can anticipate that as those entities come into a country, a lot of business entities that are tied to them will follow. So they will have to monitor that quite carefully. And then there will also be the big issue of reputational risk as well, because Wagner has been under a lot of scrutiny for its methods, particularly in Mali, and that's also likely to impact businesses.
Great. And Tristan, just one other question related to that, I think, just while we've got you. So I guess there's a question here around what do we think that African leaders should be doing, could be doing, to look at how they could permanently stop insurgency or some of these coups. So I appreciate that's a relatively expansive question, but I'm just interested in some thoughts from you or any of the other panelists there. Yeah,
I can try to something that we also speak a lot amongst ourselves when looking at those countries and with some of our contacts on the ground and other observers and analysts. I think something that's very important, and I don't want to just summarize the question to the simple thing, but is that for now, a lot of African governments have, with a few exceptions that I can mention, have really mostly relied on military solutions to those insurgencies. And I think what's really important is that it should be, they basically over-relied on kind of heavy-handed military approach to what are essentially political problems and political grievances. Those insurgencies are all tied to local dynamics, local feelings of resentment towards the authorities or communal tensions and things like that are specific to every context, but the government has been mostly focused on combating the militants on the ground rather than addressing those political dynamics that allow militant groups to thrive. We've seen some examples, like in Côte d'Ivoire, for example, where, and also previously in Niger before the coup, where the government was providing a dual answer, addressing the political issues, but also providing a military response. And this is the places where we've seen a successful approach taking place. So hopefully that answers the question in some way.
Yeah, no, great. Thanks, Tristan. Maybe Patricia, one for you. Which countries do you think are likely to be more able to remain neutral despite, as you mentioned, what we see is this rising geopolitical competition?
Sure, thanks, Tom. I think one of the key findings of the report that we highlight is that the bigger the economy, or kind of the more regional influence that it has, the better able it is to stay neutral. So the regional heavyweights have been notably non-aligned, and that I would say include Nigeria and Kenya, who are I would say playing the game quite well. So on one hand, they are attracting, or they used to attract a lot more Chinese investment in the infrastructure sector. On the other hand, the US has been very keenly engaging both of these economies on a whole host of issues, from counter-terrorism through to investment promotion. And then at the same time, the EU and European countries view both Kenya and Nigeria as pivotal to their Africa strategies. So the bigger the economy, the easier it is for them to stay neutral. Just wanted to highlight there also Kenya's emerging role as the sort of climate champion. You know, it just in the recent weeks they hosted the Climate Week, and there's a lot of excitement generated about the Nairobi Declaration, which is really seeking to get more financing on climate-related issues into the African continent and into the developing world more generally. So I think of the countries that I can select, I think Kenya is playing a very interesting and neat game when it comes to trying to get the benefits from geopolitical interest and rivalry, because it is managing to secure at the very least pledges of investment from all a range of geopolitical actors. Thanks, Tom.
Great, thanks, Patricia. And perhaps Jacques, one for you here. I guess you've chatted through some of the sort of risks, challenges, issues on the economic side, but any broader risks that you're seeing on the economic side that the team at Oxford Economics Africa are really keeping an eye on?
Sure, Tom. Yes, I think as I highlighted with Ghana, a lot of African countries are, of course, it's nothing new, facing fiscal problems. The situation does look a bit different than it has looked before, just given the fact or the rate of how public debt has accumulated across the continent. The fact that over the past year, a lot of African countries have seen record rates of monetary policy tightening. And also over the past year or so, we've seen external borrowing costs surge with the spreads over US yields also surging. So, tapping external markets isn't an option anymore. So, this pretty dire fiscal position isn't just a problem for, investors that might, worse comes to it, take some haircuts on their investments. The problem is when this spills over into what the governments are capable of doing and the services and the quality of services that they are able to provide. And of course, the inability for governments to invest, if the policy frameworks aren't there to encourage private investors to invest, or if the investor appetite isn't there to invest in these countries, given the institutional environment, then the government sort of has to step in to provide even the most basic services and investment in critical sectors like water, electricity. So if the governments aren't in a position to invest at all, and the situation or the services that they provide continue to deteriorate because of these fiscal constraints, that is a real risk, because as I said, it's not just investors that might lose money. It's the overall population that's going to see a deterioration in their socioeconomic circumstances. And that, of course, raises the potential of increased instability and the risk that this then sort of spirals into a downward spiral, deteriorating services, increasingly aggravated populations, weak economic growth, which then also contributes to weaker fiscal capacity. So then the picture can turn really ugly. So that is something that we keep an eye on, which countries are doing what they can or are making progress in, to steady the fiscal ship, because at the moment, over the past decade, a lot of countries have seen a big weakening in their government finances. So a lot of them have to make a plan to improve that now.
And Jack, I guess sort of continuing on that same theme, a question from Mario in Portugal, just around sort of how more broadly we see that debt situation going forward in Africa, but also perhaps as well the role of IMF or the IMF and perhaps as well DFIs in that.
Well, we have seen a lot of countries approach the IMF again. Even Ghana, who's recently said they won't do it again, they've approached the IMF more than 10 times in recent decades. And even countries that aren't in such fiscal or economic problems like Senegal and Cote d'Ivoire, they sort of approaching the IMF and getting those programs in place as sort of a backstop to just sort of adjust in case, to appease potential investors, to show that their governments are working with the IMF to create the environments that are, conducive to investment. But the broader debt story is interesting because most countries will have to explore new avenues to, fund their development, actually more broadly, because, tapping domestic markets isn't going to work. Tapping external markets is going to be too expensive. So now they have to start exploring perhaps privatization of some of the SOEs that are also driving the fiscus and that aren't providing the services that the economies require for broader economic development. So we have seen a lot of countries exploring that again. There's some new funding channels related to climate change. There's a lot of funding going around that could replace public investment by directing that funding to project-specific things in energy, water, climate change mitigation efforts. So, all the institutional improvements that have to take place to tap that special funding could also result in, some significant changes. I think that's it. Some countries will have to get creative in the way they're funding their governments.
Great. Okay, no, thank you, Jacques. And I think probably we've got time for one more question. This one from Milton. In the 2022 ARI report, it's sort of quoted as saying private actors were guided to be mindful of political issues, given the competition for projects in saturated markets. The question from Milton is, I guess, what has changed as we get this new report? And I'm not sure who wants to take that one, perhaps Vincent or Patricia?
Sure. I mean, I would say, obviously a year is a fairly short time, and some of these trends haven't kind of drastically changed since the last report. As we hopefully have highlighted, today, the geopolitics is potentially the main trend that has really picked up over the last year, and that has heightened, you could say, competition for some of those strategic projects. And so the sentence that you referred to, Milton, here still rings true today, potentially even truer in some of these areas, as we've described, that are the object of greater competition, such as critical minerals or kind of strategic critical infrastructure that could have a military purpose, for example. But in terms of the advice of kind of getting mindful of political risk of a country's foreign relations and a country's domestic political stability still rings very true today, and wouldn't have changed dramatically in the last 12 months.
Great,
And
thank
I guess,
you. Yep,
Tom, if I can just add on there,
of course.
one other related, I suppose, trend to watch out is not drastically different from what we've said in previous years, but there is kind of a rising pressure on private companies themselves to try and remain neutral in a time when geopolitical tensions are rising. So yes, there is very much still the same advice given, but I suppose right now at this point in time, companies themselves are coming under pressure to try and remain geopolitically neutral. So it's not in favor of companies to either project themselves as a national champion, so to be viewed as a purely US company in a country where perhaps the regime is leaning closer to Russia might not be the best posture to take. It's just these sorts of issues have really come to the fore in the past year. So definitely continue to be mindful of political issues, but also kind of take a step back and think through the geopolitics of some of the projects that investors are evaluating.
Thank you, Patricia. And I think, yeah, very wise words to close out the session today. Conscious that we're almost at the top of the hour. So just from my side, wanted to thank all of the panelists for their insight and their pithy perspectives. Just from my point of view, I always find this a universally positive and very well received report for a lot of our clients, noting that it pits the sort of boundless opportunity that we see across the continent against some of the sort of kaleidoscope of risks and challenges. But certainly this is a report sits front and center for many companies globally in terms of their strategic planning and how they look at the opportunity and the risk across Africa. I'll close by just saying, should you have any further questions, please don't hesitate to contact the folks at APO. So either Tracy or Sandra, and of course, I would encourage you to reach out directly to any of the speakers who have joined us here today. So with that, thank you very much from my side for your continued support and indeed for listening today. And with that, we will close the call. Thank you.